Hello, TrueMedia family. It is June 7, 2025, and welcome to our latest financial feast. Today's hot topic is China's possible retaliatory move that could hit U.S. homeowners hard by unloading U.S. Treasuries. Think of it like a toddler having a meltdown and tossing their building blocks out of the crib. Except in this case, the blocks are tens of trillions in debt, and the crib is the global economy.
Or, or them, a large US Treasury bond, you know what's going to happen? It could drive up interest rates sharply and suddenly. Imagine you are at the grocery store. Suddenly, cashier tell you price hike and your favorite cereal cost 50% more overnight. Similarly, if China floods the treasury market, bond price will drop. And also the yield. That's the mortgage rate also spike. That's a bad news if you have a locked into a 30-year mortgage or planning to get refinance.
Why on earth would China pull this lever? Two reasons: political retaliation. In recent years, tariffs, chip bans, and visa restrictions have escalated. Beijing wants leverage, and unloading US debt is a power play. Sending a message. Think of it like threatening to unplug someone's Wi Fi during a negotiation.
Right. The second reason is sending a message. The reason because Beijing would like to send a message to the US. This is because of thinking of like threatening to unplug someone's Wi-Fi during a negotiation. It doesn't always mean they will do it, but possibility it might result to make everyone sweat. And remember, China holds $1 trillion in US Treasury. That's a lot of blocks to toss, ladies and gentlemen.
Okay, so maybe the global adults in the room are upset. What about you? If you already own a home with a fixed mortgage, you're safe.
You are safe. No change in the rate for you since you have a fixed.
If you plan to refinance, bad news. A rate spike means fewer dollars saved. Maybe your refinance doesn't pencil out.
And if you are buying, suddenly your monthly payment get bigger without a bigger house arch.
If you rent, you could face rising rents since landlords' costs go up too.
Let's put in a family-friendly scenario. It's like your electric bill skyrocketing overnight because your neighbor cranked the thermostat up to 90 degrees Fahrenheit and everyone's faucets are leaking at the same time.
But hold on, before we panic track it, there's nuance. China might not do it. It risks losing money too. Younger economists think it's more of a bluff. Other giants might step in. If China sells, other buyers, like the FED or pension funds, could scoop it up and soften the blow. It could be gradual. A small, slow sell off over months is far less dramatic than an all out dump. We may see more of a simmer than a boil. Even if China does sell, it might be to hedge other risks, not necessarily to intentionally wreck the US economy.
Now, what are the takeaway from today's tips? First thing is you have to stay flexible. If you are refinancing or buying soon, get a quote. But know that the rates could jump.
Watch policy moves. Trade and tech policy shift between the US and China could trigger new flashpoints. Diversity. If you
Yes, diversity is the third reason. If you have investment, consider spread, bond, equities, or real estate as well. I mean, some other good stuff that can help you to diversify your economy or your investment.
In short, yes, China dumping treasuries could raise US rates, but the worst case scenario is unlikely. Bluffs, diplomatic horse trading, and buffer buyers all provide some cushion. That said, this is one to keep an eye on, especially if you're floating in a low rate mortgage or gearing up for one.
So there you have it. China's potential treasury tantrum could shake up rates and possibly your wallet, but it's far from guaranteed apocalypse. You are a homeowner, buyer, or just financially curious, stay informed and be prepared.
And hey, if the rate hike does happen, at least we'll have something hotter than the summer sun to talk about. Thanks for tuning into this True Media report.
Drop your question below or
Send a note. Would you like refinance now or wait it out? Let's discuss.
thank you for watching, and now come back with another episode very soon. Thanks, everybody.